The second time in less than a week, it looks like India has once again preempted a sort of a danger or a crisis which could face the institutions in the country. This time round, mutual fund industry, which is already facing a cash crunch, one, due to redemptions because of the crisis of confidence in equity markets, and second, because of the way the inflows have dried up into equity mutual funds. It looks like they're having a tough time. RBI didn't lose any time to open up a special window to give them a 20,000 crore rupee lifeline, which will make sure that there is no liquidity problem when it comes to mutual funds. It will prevent them from winding down, and that means that going ahead, once overall redemption pressures die down, it will be business as usual for India's mutual fund industry.
Mutual funds may be considered a safe investment, but the mutual fund industry is far from safe as it battles a severe cash crunch. Plagued by heavy outflows and a lack of inflows, the country's mutual funds have now been thrown a lifeline by the Reserve Bank of India. The RBI today announced a special liquidity facility pumping in up to 20,000 crore into the sector through the banking system. At the same time, the RBI allowed mutual funds to borrow from banks using certificates of deposit or CDs as collateral. The RBI also relaxed restrictions on buyback of CDs for a period of 15 days.
This was a long-felt requirement and it has come very timely. The mutual fund industry in India is showing the early warning signals of the problems of liquidity in the financial markets.
The decision to pump in cash comes after senior members of the Prime Minister's Liquidity Committee highlighted the redemption pressures being faced by the debt funds. In the month of September, these funds saw an outflow of 46,400 crore rupees, its highest ever outflow. Income funds, which are heavily invested in corporate debt, saw an outflow of 26,800 crore rupees on worries of quality of investments. While liquid funds, which are used by corporates to park excess capital, saw an outflow of 19,700 crore rupees. Though equity funds continue to see marginal inflows, the money coming in has not been enough to avert a liquidity crisis at some of the smaller funds.
There are one or two fund houses which might face some difficulties, and therefore we want this line of credit to be put in place.
Measures announced by the RBI today are expected to help mutual funds get ready cash for the short term. But with financial turbulence expected to carry on for some time, mutual funds may have to readjust their strategies so that the industry does not face a crisis of confidence. In Mumbai, Vadira Dugal, Ragini Verma for NDTV.